Moving countries can be one of the most exciting and most challenging things you'll ever do. And we're here to take one big worry off your plate: your taxes. At Expat Taxes, we understand the complexities of Irish tax from your perspective as an expat and tailor our advice to your needs. With decades of expertise, our team at Expat Taxes will help you navigate tax residency, cross-border taxation, reliefs and returns, and will work with your country's tax advisor to make sure your taxes are sorted. Whether you're an individual or a corporation coming from Australia, the United States, the UK, or anywhere in the world, we want to help you. So visit us at expattaxes.ie to book a consultation today, and let's make moving to Ireland easier together.
Welcome to Tax Bites for Expats, the top tax tips you want to know as an expat. The podcast is here to help answer the common queries and concerns expats have when moving to or from Ireland. Complex taxes explained simply. We'll focus on the Irish and international tax issues to be aware of to ensure you save time, money, and stress.
Hi, my name is Stephanie Wickham from expattaxes.ie. You're listening to the Tax Bites for Expats podcast, the show that explains the do's and don'ts of income taxes for people who are moving to or from Ireland. Hi everyone, thanks for joining us. I hope you're all having a good week so far. This episode, we are going to talk to somebody who we've spoken to before, and the episode was really well received. And we're going to have a chat with Jessica Beall. And before we say hi to her, I want to give her an intro because she has some fantastic experience, which is really relevant to a lot of our US listeners. She trained with PwC in the US as a tax advisor and transferred to PwC London before she made the move to Ireland. So she's got an eclectic background when it comes to working in different jurisdictions and specifically in the realm of US taxes. She's then moved to EY in Ireland, and simply because being a US advisor wasn't enough, she also trained to do her Irish tax exams, which is something to be applauded. Now she focuses primarily on US taxes and is the founder and director of Beall Tax Consulting. Jessica, thank you so much for joining us. It's a real pleasure to have you on. You're really, I suppose, eminent in the field of US taxes in Ireland and work with some clients that we share, and we really appreciate you coming on to speak with us. Thank you.
Well, thank you, Stephanie. Thank you for having me.
Yeah, it's great to have you on. So the topic today is state taxes. You know, we were talking briefly there before we started to record about the area of state taxes. I'm sure it's something that you see your US clients have questions on. Give us the 101 on state taxes.
Would be a relevant topic to kind of go through today, largely because some of the types of clients that you and I both see, kind of people moving in or out of Ireland from the US, when we first start speaking with them, a lot of times it is kind of the federal tax rates and the Irish tax rates that we're looking at for any kind of planning. Or even on the Irish side, you're looking at residency planning and remittance basis planning. And something that sometimes comes as an afterthought is, well, wait a second, what state did they come from? And the state tax implications can be quite significant if you consider something, I suppose, just as a very brief example, if you consider someone who, or stop me if I'm wrong here, Stephanie, if you have somebody coming into Ireland, sometimes the planning might be, if you're considering selling an asset or if you're considering selling stock, that you might sell it before you trigger Irish residency, because the planning is normally to minimize your Irish tax because Ireland has such high tax rates.
Mm-hmm. Yeah.
So if you do sell something, you're avoiding, or not avoiding, but you're planning around that 33% capital gain tax in Ireland. But if they're still resident in the US, the federal rate is a lot lower for longer term gains, something that's held for more than a year. So the federal rate is 20%. You also have net investment income tax to consider at 3.8%. But then what state did they come from? A lot of times the individuals we see coming over are from the high tax states, so places like California or New York, so California is an example that the state tax rate, if they make over $1 million, they can be paying up to 13% state taxes.
Wow. Yeah.
And it's otherwise anything below $1 million can be up to the 12.7% tax rate. So combined, when you compare the California rate, the federal rate, net investment income tax, you're pretty much in par, if not over, the Irish 33% tax.
Mm-hmm.
So even though certain kind of planning might make sense from a federal and Irish tax perspective, the state might kind of change the outcome when you look at overall tax costs.
Yeah.
So I thought a lot of times, like I said, that sometimes comes in as an afterthought or at the end after looking at some of the planning alternatives, but it really should be discussed and considered as the planning is being discussed.
Yeah. And tell me, for I suppose, for my own knowledge and for anybody who's interested in it, state taxes, how do they work broadly? I know each state is different, but it's a separate tax return. It's a payment separate. How are state taxes normally paid? Is one question I would have for out of my own interest.
Yeah, well, and that's something that's quite common for someone who is a non-resident or someone who maybe doesn't have any presence in the US, but might still have some state-sourced income. And maybe I can go into that in a bit more detail when we talk about residents versus non-residents. But the issue is, how do they pay the state tax? Because it does require a separate tax return that gets filed with the local tax authority in that state. And as you said, every state has different laws. But when you actually look at how to pay the tax, a lot of times you need to have a US bank account or even a US address. For the federal tax return, it's still quite complicated. And I've run into a lot of issues recently with taxpayers who are non-resident there, don't have a US bank account. Irish banks here no longer issue bank drafts in US dollars, which was one of the only alternatives that you could do. There is a way of paying by credit card, but if the balance is quite high, there's a large fee that gets applied against that. So the only other alternative for federal purposes is a wire transfer. And even at that, Irish banks here aren't as familiar with it because it is all the US kind of bank details, routing numbers, et cetera, that we're not used to using here in Ireland. So it can be quite complicated, even for federal purposes. But at the state level, there is no way to wire transfer the money. And a lot of times, if you want to use a credit card, the state needs to have a US address. So I've had some taxpayers with no solution on how to pay. And in some cases, they've either had to go to a family or a friend in the US who might have an account that they can pay them back. Or in some cases, I've had the taxpayer is a partner in a US partnership, and the partnership in the US might be able to help pay the tax for them if they're not withholding, and then just reimburse in that sense. But it is something that's actually an issue, and there's no clear solution on for paying the tax.
This happens, doesn't it? And we see it from an Irish perspective as well, is that, there's currently lots of changes going on in the space of like non-resident landlords and collection of taxes, is that, when the majority of people who pay tax to a country reside in the country and are present there and have a bank account, it all seems to work relatively smoothly. As soon as you deviate from the norm, it becomes a bit more complicated. And that's a really valid point you raised there, is just the administrative issues that come up with this. The scope of state taxes, I completely acknowledge that the rules are different in each state, but, broadly, is it easy to summarize what state taxes apply to, or is that too difficult and it's granular because it's based on each state?
I think there's some general ideas that you can go through. And obviously, like you said, every state, all 50 states, have a different set of tax laws. Some conform to IRS rules, the federal rules, and some don't. And one example there that might be kind of easy to understand from a simple technical terms is, if you have a U.S. citizen that is maybe brought to Ireland for a short-term assignment, and say they were California domiciled and resident before they left. So we're looking at California state tax rules. For federal purposes, there's something called a foreign earned income exclusion that a lot of people might be familiar with. So in 2023, the exclusion is $120,000. That can be, so foreign earned income that can be excluded from federal income tax, up to $120,000. Now, maybe they're also available for the SARP relief here in Ireland, if they're sent here on assignment. So maybe it's not taxable in Ireland as well. But for state purposes, if they are still considered Irish resident, maybe because they're domiciled there, California doesn't follow that same exclusion for federal. So that $120,000 that might not be taxable for federal purposes will still be taxable for California purposes.
Wow. Okay. Yeah. So I think the message is don't assume that the federal and state taxes are following the same fact pattern in terms of one doesn't necessarily follow the other.
Exactly. The same reliefs and deductions are not always going to be the same. And like I said, some states conform to IRS rules and others don't. And California is one of the biggest ones, I think. But then it does come down to, I mentioned a lot of terms there. I mentioned whether you're domiciled in the state and whether you're considered resident there. And the starting point, I usually, when I go to explain this, the starting point is when you're looking at federal and Irish taxes, there's an income tax treaty in place. And that income tax treaty is there to try and eliminate a double tax scenario. So there's reliefs and everything provided within the treaty. But when you look at, it's actually under Article 2 of the Irish-US Income Tax Treaty, it outlines the taxes that are covered by the treaty. And what's excluded from that are state taxes. So even if you can rely on the treaty for relief from a federal or an Irish perspective, again, the state taxes are still relevant.
I think from an Irish perspective there, I'll just add that, yeah, I think you're entirely right. What we can look to do is to take a deduction for the state taxes against the income. But I would generally summarize that as being of limited value from a cash perspective compared to a tax credit. So ultimately, for example, if somebody's paying 52% tax in Ireland, the benefit of the state taxes is that the tax is deducted from their income. So therefore, they're getting half of the state taxes as a reduction. Whereas a tax credit for a federal income tax perspective will usually be a 1-for-1 matching. So for example, $52 of US tax would wipe out $52 of Irish tax if you were doing a like for like comparison. So it's just not as effective, but it is still there as a deduction. But exactly. And I think that's something we've looked at before, and net investment income tax comes into the same heading.
Yeah, similar. Yeah, the California taxes and net investment income tax, where you potentially get a benefit on the Irish side. But like you said, it's not a dollar for dollar, euro for euro benefit, but it's something.
Exactly. Better than nothing. But ultimately, when you're paying federal income tax, the treaty covers it and these other taxes aren't covered by it. That's basically it. And then that comes as a surprise to people sometimes, doesn't it?
Moving countries can be one of the most exciting and most challenging things you'll ever do. And we're here to take one big worry off your plate: your taxes. At Expat Taxes, we understand the complexities of Irish tax from your perspective as an expat and tailor our advice to your needs. With decades of expertise, our team at Expat Taxes will help you navigate tax residency, cross-border taxation, reliefs and returns, and will work with your country's tax advisor to make sure your taxes are sorted. Whether you're an individual or a corporation coming from Australia, the United States, the UK, or anywhere in the world, we want to help you. So visit us at expattaxes.ie to book a consultation today, and let's make moving to Ireland easier together.
Which kind of then, brings me to my next question, which is, when, and again, this is a difficult question to ask because it feels unfair because the answer obviously varies, but, when does somebody stop paying state taxes? Is that a case-by-case analysis?
Yeah, well, it's not an easy answer, but it goes back to what I started to say about whether they're resident. And I was saying I was using the terms domicile or whether they're resident there. So again, every state has a different set of rules to determine who is resident in the state. Most states start with, are they domiciled in the state? And that's a similar concept or starting point is it's the same concept that we use for Irish purposes when somebody's domiciled. It's where they intend to remain on a permanent basis. So a lot of times that's something that's hard to prove. It's the intent and where some of the connecting factors and the evidence might show where are they more closely tied to. But for state purposes, in addition to that, you might have a domicile because, say, you were born there and you've lived your whole life there. But some states also have what's called a bright line test, which is they look at a certain number of factors that would indicate if somebody would be presumed domicile, or similar to a term that I think they might use in the UK, but deemed domicile in the state. And an example that I've come across recently is in Ohio. So someone that has spent a significant, they call them connecting factors, which it's not necessarily how many days they spent in the state, but how many connecting factors they have in the state, how much time they spent there over the prior few years, whether they maintain a permanent home in the state, and even if they still have a driver's license in the state. Another one is, are they still registered to vote? So if you move abroad, you can have an absentee vote, but what state are they registered in? And for Ohio purposes, something as simple as keeping your driver's license under the bright line test rules can mean that you're still considered to be Ohio domiciled. So as a domicile, you're resident in the state. As a resident, you're taxable on your worldwide income in the state.
Okay, so it's looking at those specific facts and circumstances for each individual, and yeah, I suppose that there obviously comes a point when if it's a unique situation, somebody needs advice from somebody in that specific state. What's your personal modus operandi, when you get into kind of unusual situations?
So then, if it's kind of a gray area, or there's a challenge of, because in Ohio, that example, the bright line test, if you don't meet all the criteria, you can't file this form to say, I'm not domiciled in the state, so that you're considered deemed domiciled. But the next step is, well, how do I argue? Because I'm breaking all my ties. I simply just have a driver's license there. And that's a point where you might actually need to refer to an advisor that practices in that state and is more familiar with local case law and local practice on what you need to do to break your ties. Although if your intent is to go back to the state, that's going to be something that's hard to prove. But that's where I would normally refer to someone that might be advising locally in the area, more familiar with the state rules.
Is there state by state interpretations of domicile, or does there tend to be an overarching definition of it that applies to each state?
Well, I would say that both. There's an overall arching as a starting point, but then, like I was saying, for Ohio, there's bright line tests. So every state will have a different set of kind of bright line rules. But also, there are some states that have what they call a safe harbor rule, which is to show that you're not domiciled in the state. So I've talked about California a lot, which is a really high tax state, and New York, which is also one of the other kind of top 5 high tax states. Both California and New York have a safe harbor that says there's slightly different rules, and I'm simplifying here, but it says if you spend over 548 or 546 days outside of the state in a foreign country, and you don't spend a certain number of days in the state, that you can be treated as you fall under the safe harbor rule, and it says you're not domiciled for residency purposes. Okay. So there's a way of breaking that tie, but that rule doesn't apply to all the states.
Right. Okay. Yeah. Wow. It's just when you think that US taxes can't get any more complicated.
You add on another layer of the state taxes, yeah. And I think that's where it can catch someone by surprise. And I mentioned Ohio earlier. I do have a client that moved from Ohio, and it was something that came up later when you looked at, it was their year of transition, moving here to Ireland. And they later told me, actually, I just renewed my driver's license. I still have a home there, even though I'm renting it out. So, do you know, and on to add another layer, not to make it more complicated, but you have state taxes, but you also potentially have local and city tax on top of that. So those local and city taxes are often only relevant if you're resident in the state. But again, if it's a domicile state, you're still considered residency there. Even local and city have their own set of tax laws. So again, that's something that a local advisor would probably know more on, but it's something to be aware of. One of the ones we might hear or see most often is just New York City. If somebody was resident in New York City, they have New York and New York City taxes to pay.
All of a sudden, their effective tax rate in the US is it's really quite high. It's not.
I still don't know if we get up to the kind of the 52% that we often refer to here in Ireland, but especially like capital gains, the example I used earlier, you can quickly get up to 33% or more if state taxes are relevant.
Yeah. And I think, what I'm taking from what you're saying is it's this age old point that we seem to raise in nearly every episode is the value of advice. In other words, sometimes know before you go is a phrase I use sometimes, where it's, if you have a checklist of things, if you're planning a move, add state taxes to the list. Chances are your advisor, whoever they are, will have some knowledge of it. And if they don't, the value of reaching out to an expert is that some of these nuances can be navigated, and then the savings are, they can be large, because it's essentially, it's a kind of a thorn in your side, isn't it? If it's something you don't need to pay, nobody wants to pay taxes that don't actually have to be paid. And if it's a simple action that can be taken to legitimately not pay it, then you should be incentivized to take that action, I would imagine, in most cases.
You're right. And we always say that it's better to get the advice before you action anything. And it is a case where sometimes I do talk to a lot of people after they're already here and they've already undertaken some type of planning, both for US and state purposes. It's always worth trying to plan ahead and speaking with someone. And even if I don't know the answer myself, as an example, it's trying to, drawing within the network to see, is there somebody I can refer to at the state level if there's further input needed.
Yeah. Oh, definitely. Yeah, definitely. Jessica, that's such a good rundown of the taxes. Is there any key point you'd like people to take away if they're listening to this episode? I think you mentioned one of them there, but yeah, I'm keen to hear if there's any key point you'd have. If someone asked you state taxes generally, what would your response be?
Well, I would, like I just said there, I'd always say take advice before you go. Learn the state rules if you're not familiar with them beforehand. If you need to break residency, there's some planning that you can undertake in order to break ties, and learning what that is before undertaking any kind of planning or actioning anything. And something I actually haven't addressed is kind of if somebody is a non-resident. I think I've run into a lot more cases of someone, say, that's here in Ireland that might have spent in the US, working in the US, or maybe they have state-sourced income from like a partnership interest they might own that might have a business in the States. There's different state liabilities then where a tax return is also required. And a lot of times those things aren't expected, especially somebody who might just go to the US for maybe 5 working days a year. There's relief under the treaty to say you don't have any federal tax. But again, state taxes don't come within the treaty. So you do need to look at each state and know the rules and know the sourcing rules in that scenario to make sure that you're fully compliant in filing the state tax returns. And again, that then comes down to, how do you pay the state taxes? If there's an employer involved, sometimes they can help or even plan around that. But oftentimes some of the clients I talk to don't have that assistance and are looking at trying to speak with somebody and an advisor to know their obligations and then to stay compliant with them.
Yeah. If somebody has questions on this, Jessica, what's the best way that they can reach out to you to kind of initiate a discussion? Because I suppose what we find is the beauty of working with somebody like yourself is you are based in Ireland, but you're qualified in US taxes. Tell us how somebody goes about initiating a discussion with you if they've got questions following on from what we've spoken about today or other US tax issues.
Yeah, well, I do have a website, bealltaxconsulting.com, where there is an email address on there where you can reach out to me, or just emailing me directly and setting up an initial introductory call. I usually like to have an initial call with someone just to find out some of their background and kind of figure out the scope of the work that might be there. And sometimes from that discussion, there might be issues. Usually state taxes is something I raise as part of that discussion to say, well, we should talk about this as well with whatever planning is being considered. And then from there, looking at the advice that's needed and taking next steps.
Yeah, brilliant. Yeah. Thank you so much. I think that's been really comprehensive discussion for somebody who kind of wants the one-on-one on state taxes, if they've planning a move to Ireland, if, they're already here. And I think that the beauty of it is that ultimately it's something worth investigating if you're paying them. That's the takeaway, is if you're paying them,
Absolutely.
ask the question, why do I still need to, and is there action I need to take to kind of sever a link that could give rise to a tax saving. Thank you so much. It's the second time we've had you on. I always really enjoy our chats. I find them really useful and insightful for our own clients, and I know we have mutual clients who benefit from your expertise on a day-by-day basis. So thank you for giving up your time. We really appreciate you joining us.
You're very welcome. Thank you, Stephanie. It's a pleasure.
Thanks for listening to Tax Bites for Expats. Please do leave a rating or review wherever you listen to your podcast. And as always, remember to take professional tax advice specific to your personal circumstances before acting or refraining from action in connection with the matters dealt with in this series. The material in this podcast is intended to give general guidance only.